Hi, my name is Aliece Inman with eXp Realty. I'm here today to talk to you about your home buying journey. Now, a lot of times people are concerned at the outset about making sure they have the proper budget and making sure that their credit is up to par for them to take the best possible advantage of interest rates. Now, today is July 15th, 2024. Over the weekend, we saw some decrease in interest rates below 7%. We haven't seen that in quite some time. So I wanted to just give you a bit of an overview about how you can get the best possible profile to get your interest rates as low as possible. Now, what ends up happening whenever you go to pre-qualify and get pre-approved with your lender is they're going to pull your credit. Of course, you're going to provide them with all of the necessary information, such as your pay stubs, potentially bank statements, depending on what type of loan you're getting. But if you're tax returns, and you're going to need 2 years worth of this information. And so that's just, the tip of the iceberg. They may ask you for more information. But they're going to pull your credit and they're going to look at your credit scores. And the higher your credit score, the lower your interest rate. So let's dig into that a little bit. I work with a program that will help you to boost your credit scores. Now, what ends up happening at the outset is we'll do a credit analysis. With this credit analysis, we'll identify any types of items on your credit report that are preventing you from having a higher credit score. So for example, if you have negative items or collection items on your credit report, this credit analysis is going to tell you exactly how many points those items are causing your score to be lower than what it could be. It's going to tell you once you remove those items, how much your score can increase. So once you've taken care of that, that is, the reactive type of things, but we also have some proactive things that we offer you through these programs. So for example, we give you a roadmap, and on this roadmap, you'll come to a milestone where it'll be time to get into trade lines, and those trade lines will boost your score even more. So that's just one example. So what I want to do is get you in contact with my affiliate to get your credit boosted so that when you go to get pre-approved, you'll get the best possible outlook, the best possible interest rate that you can. And of course, as I mentioned, with interest rates decreasing, now is a great time to take advantage of all of these types of things to get you in the tip-top shape that you can get into, to make sure that, when it comes time to actually living in your home and paying that monthly mortgage, you're not house poor. House poor meaning you're paying all of your money towards a house and you don't have anything left over for yourself. So I want to also give you a high-level overview of the home buying process. So during your home buying journey, once you have gotten your budget in place, your credit in place, and you've gotten your pre-approval, then we'll take that pre-approval from your loan officer and we'll go shopping. Now, we're going to go shopping based on what your budget is. So if you have a pre-approval for $250,000, we're not looking at $300,000 houses. I'm sorry to disappoint you, but we're going to keep it real and look at what's in your budget. We want to be as realistic as possible and handle things as timely as possible. The other thing to keep in mind is that whenever you've actually made an offer and your offer has been accepted, it can take 45 days or more to get to the closing line. It can take 45 to 60 days. It can depend on the type of loan that you have. But just keep in mind that when we're working backwards, if you have a certain date in mind that you want to be able to move into your home, you have to keep in mind how long it's going to take for you to go through all of these processes. So we go shopping, find a house, make an offer. Our offer is accepted. With this offer that has been accepted, typically, you're going to be paying an earnest money deposit and a due diligence deposit. Your earnest money deposit is going to go to an escrow agent. Usually that's going to be your closing attorney. I would not be able to hold your earnest money, but your closing attorney can. You can choose your closing attorney, or I can recommend some for you. I do have some attorneys that I work with. One attorney that I do work with in particular that I do like, and there are a couple of others that I'll be able to refer you to as well. But ultimately, as a buyer, it's your decision what attorney to use. Now, so your attorney is going to hold your earnest money deposit. Your due diligence deposit, however, that goes directly to your seller. Your earnest money is just good faith saying, hey, I want to buy this house. It's potentially refundable. If something goes wrong, you can get the earnest money deposit back. Your due diligence funds, however, that go to the seller, it's very difficult to get back. So typically in North Carolina, once you've made that due diligence deposit, you're committed to the house. That's money you're not going to get back unless there's some breach of the contract by the seller. And that's something that's very rare that you come across. So whatever due diligence funds you pay, whatever earnest money you pay, it does go towards the purchase of the home. The difference between the two is you can get the earnest money back within the due diligence period. After the due diligence period, you don't get earnest money deposit back either. Your due diligence money, you're typically not going to get that back at all. So moving forward, due diligence lasts about 21 days. And what due diligence means is a period of time that you go into the home. The seller takes the home off the market. You go into the home and you make your inspections. You get your inspections done. You'll get a radon inspection, termite and pest inspection. You can get your surveys done. All of these are falling under the umbrella of a general inspection. If you are in a more rural area or wherever the home is and it has a septic and well, you'll get those types of inspections done as well. But your inspector will be able to go over this information with you in more detail. If I didn't mention it, you would get a radon inspection. Radon is a naturally occurring gas in North Carolina that can be deadly. And so we want to make sure that we don't have high levels of radon in your home. There are some mitigation systems that are available. But again, this is all information your inspector will be able to go over with you in more detail. Now, your due diligence period typically lasts about 21 days. And what that does is it allows for you to get the inspections, make any negotiations with the seller. If the seller does negotiate repairs with you, the seller has up until the closing date, not the end of due diligence, but the closing date to actually complete those repairs. If for some reason the seller does not want to do any repairs, you can negotiate seller concessions, seller credits, things that essentially will offset the amount that you will have to pay to get those repairs done. So you can say, hey, seller, you don't want to pay for this, but here's how much it's going to cost me. Can you come down on the purchase price? Or can you provide me a credit towards this? There are a couple of different things you can do to negotiate with the seller during the due diligence period. Now, I just want to emphasize during the due diligence period. Once that due diligence period has expired, the opportunity for negotiating any repairs has also expired. So, a couple of things to keep in mind. You pay your earnest money, you pay your due diligence. Earnest money is refundable during due diligence. Due diligence money is not refundable. Once the due diligence period is over, earnest money is not refundable. During due diligence, you're getting your inspections and you're also going to negotiate any repairs. After that time frame has expired, you don't get earnest money back. Your due diligence money you would not have gotten back anyway, typically. And the opportunity to negotiate repairs is gone once your due diligence period has been completed. So it's going to be very important to keep that date in mind. The other thing that happens from contract to closing, contract being when your offer was accepted, closing, of course, being the date that you finally close on the home. The other thing that happens, and it's usually during the due diligence period, is your lender is going to have an appraisal done on the home. Now, an appraisal done on the home. Now, with this appraisal, I, as your broker, would not be able to have any communication with the appraiser. The lender is going to be the one in direct communication with the appraiser. If your appraisal for any reason comes in lower than what your purchase price is, you have a few options. One, you can walk away. Keep in mind, you're going to lose your due diligence money. Two, you could bring money to the table. Three, the seller can come down on the price. So those are your options with the appraisal. If it comes in, the goal is for the appraisal to come in at or above what the purchase price is. So of course, at the outset in negotiating the purchase price, that'll be something that we would have already taken care of to make sure we're as close to the purchase price as possible with the value so that we won't run into an appraisal issue on the back end. I am not appraising a home, obviously, but the types of things that I would do at the outset would help you to avoid that pitfall. So perfect world, we've gone through due diligence. All the repairs, if there are any, are taken care of. We've gotten everything lined up. You've got your utilities ordered ahead of time and transferred. All of that has been scheduled ahead of time. And we get to the closing table. Your appraisal comes in great. Matter of fact, your appraisal comes in higher, so you walk in with equity. Perfect world. So get to the closing table, and what ends up happening a couple of days ahead of time, you will have wired whatever funds that you need to wire transfer to your attorney. You'll get all of that in your closing disclosure a few days ahead of time. So you'll know how much money you need to bring to the table ahead of time, and you will have wire transferred those funds to your attorney. So we get to the closing table the day of closing. We go over all the paperwork, make sure all our I's are dotted and all our T's are crossed. And once everything has been completed, signed off on, your attorney is going to then record your deed with the county that the home sits in. Once your deed has been recorded, it could take a couple of hours. Then you'll get your keys. You'll have officially closed, and you can move into your home. First things first, let's get your credit in order. Talk to you soon.